Hello everyone. So we have reached to our fourth topic of chapter 2, that is techniques of lending and the types of lending. So in the techniques of lending, there are five types of techniques. So the first one is bank. This is a well-known technique we know already. So banks have been offering many products like mortgage loan, personal loan, construction loan, and other such loans, specific loans. Then the credit unions. Credit union is a cooperative institution which is controlled by the members, like the people who are using the services. That they form a union and they lend money to each other. That is a credit union. Then peer-to-peer lending. In this, it is also known as crowd lending or social lending. It is a financial method which enables the individuals for borrowing and lending money without use of a financial institution and intermediary. Then credit cards are the credit cards give like it's a loan method also, that when you purchase products and then you get to pay the monthly bill at the end of the month. So credit cards work like that. And the financial companies make loans for those who are planning to purchase some small items like car, bike, some machine, small machine, with which has small to medium amount. Then, then we'll talk about loan appraisal. So, loan appraisal is basically a process through which a lender appraises economic availability, uh, a bankability, credit worthiness, and the technical facility of prospective borrower. So, on the components, the loan available the loan appraisal is based on two important factors, that is the willingness and the ability of paying the loan. So for ensuring this, both of the factors, the banks and the financial institutions have to go through the past history of the credit of a person, then income sources, how he earns his money, then understanding a customer through interaction and observing their body language. Sometimes income source, the documentations uh, like false documents, and uh, it is very important to check the overall uh, attitude of a person. So body language is one of them. Then assessment of customers financials, and then bank checks and conflicts of interest. So the components of loan appraisal process are these: applicants income, age, qualification, profession, experience, family history of tax, business or employer. So all these things need to be considered for giving a loan. Next, we'll see the parameters of credit appraisal. This is a part of loan appraisal itself. So in this, there are three types of parameters. First is technical feasibility, then economic feasibility, and bankability parameters. So first, let's see the technical feasibility. In this we'll see the technical steps of a person. Firstly, the living standard, locality, telephonic verification, qualification, political influence, and then preference. Next, in economic viability, firstly the installment of income ratio. So this ratio indicates the percentage of installment to income of the customer. Then the fixed obligation of income ratio. In this ratio, the banker takes into consideration all other loans which have been availed by the customer, and the amount is still due, including the current loan which would be sanctioned by the bank or the financial institution. Then the loan to cost ratio, the loan which he'll be taking. So what is the cost of that ratio needs to be considered. Then bankability parameters. So these parameters, like bank statement. Bank statement has to be like 6 months has to be furnished by the borrower, so that the average balance is checked to find out whether the balance is sufficient for paying installment or not. This is the after the loan is given and the repayment and all has started, then these bankability parameters need to be taken care of. Then the business continuity proof, whether his business is going good or not. Then credit interview is taken to check the customer's general attitude and needs of customer. Then profile of customer. Then the profile, it's check to understand whether the income sources is secured, and not like salaried people have security of income. Then secure security in this, bank accepts assets to as a collateral or pledge so that the loan amount could be recovered. Then ownership title, the title of the asset should be made clear, as what is the name, and if the ownership is getting passed on, so whether they have a blood relation or not. And then CIBIL report. This report shows all the credit score, that how you have been paying your credit throughout the year or throughout your credit time. Then we'll talk about cardinal principles of rural lending. So a lending business is actually not without any inherent risk, uh, especially when lending banks depends largely on the borrowed funds. So firstly, we need to take care of the safety. When banker lend certain money to a person, they have to ensure that advance is safer and money will be lent will be received back. Then liquidity. The money which has been lent should not be locked for so long that money should be returned as per the repayment schedule. It shouldn't be given much gap. Then profitability. Bank is a commercial in nature, and the motto of banks is earning profit, so that adequate dividend could be paid to stakeholders. Then purpose. Loan cannot be guaranteed to anyone without any purpose, without any speculative and undesirable any kind of like cannot be guaranteed to such purposes like speculative and undesirable. Then diversification. This is actually diversification. So diversification, the loan is not given to a few business undertakings, business houses, cities, or the advances should be diversified among in many customers, not only specific kind of customers. Then security here also. Security which is offered against loans could consist of many different items. Those items could be plot, shop, flat, building, insurance policy, etc. Then principles of farm lending. This is quite interesting principles. So in principles of productive purpose, this principle which is being given to the farmer should be given for some productive purpose, is that it should be able to generate some additional income into that farmer's life. Then principle of uh, personality. So this is based on the trust and worthiness of the borrower. When farmer fails to repayment of the loan due to crop failure, which is caused by the natural calamities or any other unavoidable issue, farmer is not considered as willful defaulter in that case. Though larger farmer who has have availed loan amounts fails repayment of loan will be considered as a willful defaulter. So this bifurcations need to be considered. Then principle of productivity. This principle says that credit is not only meant to increase the production of the particular enterprise, but should also result in increasing productivity of other factors that are employed in that particular enterprise. Then principle of phase disbursement. Then in this, the principle implies that the loan amount should be distributed in a phased manner, so that funds could be used in the productive way, and banker can be sure about proper end usage of borrowed funds. Then in principle of proper utilization, this principle implies that borrowed funds will be utilized for the purpose for which the loan has been taken. Then principle of payment. This deals with the fixing of the repayment loan schedules advanced by the institutional financial agency. Then principle of protection. Due to unforeseen calamity that strikes farming very often, the institutional financial agency could not keep themselves away from extension of loans among farmers. The nextly we'll talk about homestead loans. So the homestead loan program provides residents with mortgage assistance to purchase houses and other plots. Then the first one is site and services. So in this, providing the landless household with a homestead plot fulfills government's land reforms and objectives of rural housing. In house construction, the component of construction is largely targeted on those households which have already obtained with the house sites. Then repair or improve primary residence, is that homestead loans could also be taken for improvement of repairing the loans primary residencies. Then homestead farming. This means need-based credit is provided to the farmers for meeting the working capital requirement of farms. And such loans help to enable increased productivity, also to sustain sustain the income and of these farms. So we come to the end of the topic 4, and this is activity time. So in this you have to explain one principle of rural lending and one principle of farm lending. So and you have to also give examples for this. So you can refer to any book of financial products. So I hope you do this and get a better understanding of this topic. Thank you.